Hello, welcome to my YouTube channel. This is my series specifically focused on option selling. What are the things I take into consideration while selling options, and I generally, this is my setup, that I trade on 5 minute time frame, and I do not take any indicators into consideration, and I trade price action. So I follow below rules. uh, the first rule is I focus only on one time frame, that is the 5 minute time frame. I only take price action into consideration, no indicators, nothing else. I study each and every candlestick bar by bar and observing how the current price behaves in relation to previous candlestick, and I follow this rule of risk to reward ratio. If I am risking 10 to 15 rupees, then my target must be 35, 40 or 50 rupees or more than that, and depending on the market we will see in short time what I have traded. And I will also show you my contract notes. These are my contract notes, and what I have traded on that day. I will show you each and every trade and try to discuss what are the things I have learned and what had given favorable result or not. So for that, I, with the help of this bar by bar candlestick pattern, I try to understand the buying and selling pressure, what are the bulls trying to do and what are the bears trying to do, and which is the probably going to make the market move in any direction. Based upon that, I take my trades. So this is my sixth rule, is about trade selection and discipline. So these are the two things. I usually try to avoid bad trades, unnecessary trades or low probability trades. I completely try to avoid counter trends. Counter trends means this is counter trend. If considering this as a leg, bar 12 to 15 is my counter trend. Usually, or many beginners try to take this counter trend because this is safer side, but it is very costlier in long run. So I completely try to avoid those counter trends, and I try to avoid predicting breakouts. But even today, is 21st April 2026, and I tried to assume a breakout later on the day, and I was knocked out, and my actually the profit gone into a negative side. So it is better always to wait for a confirmation. First a breakout should happen, and this is my strategy, that after this first leg has been formed, I look for a pullback and focus on a second leg after the breakout. This is my system. So I pay close attention to the previous highs and lows with price behavior. This is my entry entry strategy, that once the signal bar has been formed, if I want to go long, I will sell CE once the high of the signal bar get hits, and if I want to go short, I will sell the low of the signal bar and I will sell CE. This is my approach. And let's go to today's chart. Today was an expiry date, so this was the day that it started with a not a little bit gap up, but it didn't went above the high of the previous day. But you can see that there is little bit of false breakout trying to happen. So let's go over here. So this is the first bar, and actually it was a bull bar, and over here this is the high of the previous high, and as you can see that this is the first pullback. So on so you can consider this bar 4 as what do you say, H1 buy setup. So I took a trade, and let's see at what time it was. So I got entered on 9:35. So at 9:35 I got entered, and I shorted one, I sold one PE at 250 rupees, and I placed the stop loss at 250 rupees, because most of the time it happens that the market goes into reverse direction. Previous 2 days it happened like that. As you can see that in this previous day the market broke the high and it went quite down below. There was a deep pullback, and many times it has happened. This is also a day where the market went up in the morning and it went down, so I was cautious about this, and so I put a stop loss and I got hit on at 940, and I was out with 10 rupees of loss, so it was okay. And then after this bar 6 was formed, as you can see that this is the if you consider this as a leg, this is a pullback, and this is H1 buy setup, and this is H2 buy setup. Most of the time if the H2 buy setup is higher than H1 buy setup, then it is a great considered to be a great signal. So I bought above bars 6 when 7 was forming. Let's see at what time it formed. So on 9:45, I took a trade. I sold a PE around 279.55, around 280 rupees, and then I took I got out at 10:25. I will discuss what the problem I had faced. So after entering, after I got entered on this 7th bar, the price went up till over here. It was around 50 rupees. It was 230, I think so. The high was the low of that is 230, but I didn't took the trade because I wanted the price to move further, but that didn't happen. And when this counter trend was happening, so around this point I had placed my trailing stop loss at 15 rupees, and I got knocked out at 265 rupees. So I was only able to take a profit of 15 rupees. Actually after that bar 16 happened and it broke all the things, and after that I didn't took any trade. And you can see that bar 16 broke this channel, and as you can see that this is a small pullback, and buying above bar 19 is also good trade, but it is not going to it has not moved as far as possible. And I think if I would have taken this trade, I might have got out at break even, because my target because if I am risking 10 to 15 rupees, my target must be above 30 rupees, around more than that. Okay, so this happened, and once I was knocked out, I was not able to trade again. So on and from after that, from 11 o'clock to around about the whole day, the market moved into trading range, and between two times around 1:38 and 11:35, I took some trade which I shouldn't have taken. So this was the trade I have taken. I thought that market would go down, and I shorted one CE around this place, and I have to got out at the same trade, and it was an okay trade. I could have got out at break even, but that didn't happen. And the second trade I took was shorting a CE at around 138. Around this position I sorted one call, and I thought that the price will move down, but that also didn't happen, and 3 bull bars happened which knocked out my stop loss. So considering this is a pure trading range, and breaking above the previous high should be considered, but I didn't took that trade, so I didn't took that into consideration. And you can see that the bar 62 went about broke about bar 53, and you can consider this as a pullback, but this is a very deep pullback, and low of bar 66 didn't went below bar 60. So buying above bar 67 could be done, but it was later in the trade, later in the day, and the expiry was closed, so the price and the option price do not go well together, so I didn't took the trade. So it was a great learning day for me for not getting trapped into most of the traders, or I usually get trapped in this type of trading range behavior, which I have to improve. So this was my day. So thank you very much for listening to me.